Welcome to the deep dive. Today, we're tackling something genuinely puzzling in the Bitcoin market.
Oh, yeah. What's that?
Well, you look at the price, right? Bitcoin's way up there, just what, 8% below its all-time high? Around $103,300.
Yeah, flying high, you'd expect fireworks, optimism everywhere.
Exactly. But if you look closer, especially at the derivatives market, there's this weirdly cautious vibe. Almost bearish, actually.
Huh. That is a contradiction. Strong price, but bearish bets.
Right. So that's our mission today. We're going to unpack this. Why the disconnect? We'll look at the metrics, the market behavior, try to make sense of these, conflicting signals for you.
Sounds good. And we're drawing on that piece, Bitcoin's bearish derivatives amidst strong spot demand, I assume.
That's the one. Really insightful stuff on the current dynamic.
Okay, so let's set the scene. The source talks about this unusual lack of optimism, especially with traders using leverage, like in futures.
Even though the price is so close to the peak?
Right. It makes you wonder, doesn't it? Is this something specific to crypto right now, or are these traders maybe spooked by, I don't know, wider economic stuff? The whole socioeconomic picture.
That's the big question. Where should we start digging? Maybe the futures market.
Yeah, good place to start. Let's look at the Bitcoin 2-month futures annualized premium.
Okay, break that down for us. That premium, that's basically the extra cost you pay for a futures contract compared to just buying Bitcoin now, right?
Yeah.
Compensates for the waiting period.
Exactly. And normally, in a neutral market, that premium is, say, 5% to 15% annualized higher than the spot price. That's considered healthy.
Okay, so what to do now?
Well, that's the thing. It's dropped below that neutral level. It's actually under 4% now.
I'm under 4%. Wow.
Yeah, lowest it's been in 3 months.
Yeah.
And here's the kicker. It's even lower than it was back in early April.
Wait, early April, wasn't that when Bitcoin took that sharp 10% dive down to around $74,440?
That's the one. So the premium is lower now than it was during that pretty significant drop. It really shows you the level of caution out there.
That is stark. Does this suggest maybe traders are less convinced this time? Like maybe that April drop was a shock, but this is more sustained doubt.
Could be. The source mentions this weakening really started around June 12th, right after Bitcoin tried for $110,000 and got rejected.
So that rejection might have been a key trigger. Change the mood.
Seems like it. But is it just futures? We should probably look at options too, right? See if the sentiment matches up.
Good idea. What are the options markets telling us? You mentioned the delta skew.
Right, the 25% delta skew. Think of it as like a fear gauge.
So if traders are worried about a price crash,
yeah,
they buy more put-sell options and the skew goes up, maybe above 5%?
Exactly. And if they're bullish, they want calls buy options and the skew drops, usually below minus 5%.
Okay, got it. So where is it now?
It's sitting right at 5%, on the border between neutral and, well, bearish.
Right on the edge.
Yeah. And just think, only a short while ago, June 9th actually, it briefly touched minus 5%. That was properly bullish territory.
When Bitcoin jumped from $105,500 to $110,500.
That's the moment. So it swung from bullish to borderline bearish really fast. It really highlights how traders seem increasingly disappointed, maybe a bit short-tempered with Bitcoin's recent moves.
Short-tempered is a good way to put it. You see the price stall near the top and they get nervous quickly. But are these nerves just about Bitcoin itself, or are bigger economic worries playing a part? Macro factors.
Well, the source touches on that. It notes, for example, the Russell 2000 index, the U.S. small-cap stocks. It held its support level, around 2,100, even with all the geopolitical tension, like in the Middle East, weighing things down.
So some resilience in traditional markets, maybe?
To some extent, but, recession risks are definitely up. U.S. interest rates are still sticky, above 4.25%, because inflation just isn't going away easily.
Right, persistent inflation. That definitely creates anxiety.
It certainly could be feeding into the caution we see in derivatives. But it's tricky, isn't it? Because sometimes Bitcoin is seen as a hedge against that kind of instability.
Yeah. Are they betting against the economy or just hedging Bitcoin's own potential drop? It's not clear-cut.
Not at all. And this brings us to, honestly, the most fascinating part of this whole picture.
Yes.
The massive disconnect between these cautious derivatives traders and, well, the big institutional players.
Right. Because the source says while crypto traders are known for, let's say, emotional swings.
Yeah, that's one way to put it.
And they seem worried the $100,000 level won't hold.
The institutional demand, it's been incredibly strong, robust even.
During this exact same period of derivative bearishness.
Yes. It really makes you think about market maturity, you know?
Yeah.
Are we seeing short-term speculation versus long-term accumulation playing out right here?
And there's solid data for that institutional demand, right? The ETFs.
Absolutely. The
Yeah.
U.S.-listed Bitcoin spot ETFs, they pulled in, get this, $5.14 billion in net inflows.
5.14 billion.
Billion, just in the 30 days leading up to June 18th. That's serious capital. It suggests real conviction.
That's huge. It's not just pocket change.
Not at all. And it's not just anonymous ETF flows either. The source names, specific firms, Strategy, Metaplanet, H100 Group, the blockchain group, all buying up significant amounts of Bitcoin recently.
So while one part of the market is biting its nails looking at derivatives,
Another very powerful part is just quietly accumulating, seemingly unfazed by the wobble around $100.
okay, so we've laid out this clear tension: bearish derivatives, bullish institutions.
Yeah.
What's the takeaway? What could actually, shift the mood for those derivatives traders?
That's the million-dollar question, isn't it? The source basically leaves it open. What will restore confidence? Because there's a risk here.
The risk being,
The longer Bitcoin just hangs around this $100,000 psychological level without decisively breaking higher.
the more the bears in the derivatives market might feel emboldened. Like, see, you can't break through.
Exactly. It becomes a self-reinforcing cycle, potentially. It really
Yeah.
feels like we're at a kind of crossroads.
A battle between the quick reaction traders and the patient giants.
Pretty much. And how this plays out, it won't just affect Bitcoin's price in the short term. It could tell us a lot about how the whole crypto market is growing up, or maybe isn't yet.
So wrapping this up for you, our listener, we've got these starkly conflicting signals. On one side, the derivatives market, cautious, maybe even a bit nervous, quick to react.
And on the other side, you have these institutional investors steadily buying, accumulating, seemingly playing the long game.
So the provocative thought we want to leave you with is this: which of these forces do you think wins out? Which one ultimately dictates where Bitcoin goes next?
And maybe more fundamentally, what does that winner tell us about the maturity, the evolution of this entire asset class? Something definitely worth thinking about as Bitcoin hovers near that big psychological number.